Hello everyone, welcome back to our channel. Today's topic is issue of bonus shares. This is a newly added topic to the new CA Foundation syllabus. We are going to complete this entire topic in 10 to 15 minutes. Let's get into the topic. First, we have to know what is the general meaning of the word bonus. Bonus is a benefit which you get as a result of your past transaction or activities. A common example is when you buy a washing powder, you will get a bucket for free. They give you a bucket because you bought the washing powder. The primary transaction is buying a washing powder. If you did not buy washing powder, you will not get the bucket. So, the primary and important transaction is buying the washing powder. The secondary transaction is you get a bucket for
different people for different reasons. Here, for customers, bonus is mainly to promote the sales, and employees are given bonus to encourage them to work hard. And the equity shareholders, why are they given bonus? This is the topic today we are going to see. Now we should know what is bonus share. Bonus share is a share issued by the company to its existing equity shareholders at free of cost. It's always issued by the company at par, and it is also free of cost to the existing shareholders. And what is the objective of receiving bonus shares to existing equity shareholders? The main three objectives are to motivate the shareholders, to attract new investors, and price correction in the stock market. Then we should know what is price correction. Sometimes if companies share in stock market rises up to such level that most people cannot afford it. In the given example, the first example, in market price of one share is 100 rupees, the total equity shares of the company is 10,000, and the market value of that 10,000 equity shares is 10 lakh. So, if the company issues bonus shares of 5,000 to existing equity shareholders, the only change is going to happen in the number of shares. Total number of shares is now increased to 15,000 equity shares, but the market value remains the same, 10 lakh. So, market value per share will also decrease. So because of the price decrease, now most of the people can afford these shares. Consequences of bonus issue: price correction as said above, capitalization of profits, increase in share capital, no cash outflow, no dilution of ownership in existing equity shares. Capitalization of profit means reserves and surplus of the year are capitalized in form of issue of bonus shares. The amount you capitalized out of profit will added to the share capital. Since there is no new equity shareholders, only existing shareholders get the existing bonus shares, so there will be no dilution of ownership in the company. And next we are going to see some of the legal compliances. Unlisted company should follow section 63 of Companies Act, and a listed company should follow section 63 of Companies Act plus SEBI regulations for issuing bonus shares. As I said, bonus is always issued at par. Bonus shares are always issued at par, not at discount or premium. Only some reserves and divisible profits are allowed to converted into bonus shares. First reserve is Capital Redemption Reserve, always known as CRR. The only use of this reserve is to issue bonus shares to equity shareholders. The second reserve is Security Premium Account. The amount in this reserve is accumulated by issuing equity shares at premium. Premium means a price over and above the face value of shares. And balance in this account can be used only for 5 purposes. The first purpose is writing of preliminary expenses. The second one is writing of expenses on issue of redemption of securities. The third purpose is to issue bonus shares. This is the point here. We can use security premium account for issuing bonus shares. Fourth point is premium payable on redemption of preference or debentures. The fifth point is buyback of shares. As I said, the above two reserves and divisible profit can be used to issue bonus shares. This is the order of utilization of reserves. First, we should utilize capital redemption reserve as it have only one use as to issue bonus shares. The second one will be security premium. The third and fourth one will be general reserve or profit or loss account. Another point we should note about security premium account is there are two types of security premium. One is realized in cash and another one is not realized in cash. Realized in cash means we get the premium amount in cash. If we issue equity shares at a premium rate, the premium amount we will receive in the bank account as given here. So this is premium realized in cash, and only premium realized in cash can be used for bonus issue, and not realized in cash cannot be used for issuing bonus shares. A little difference between dividend and bonus. Dividend and bonus both benefit equity shareholders, and that is a company's appropriation reserve. There will be cash outflow in case of dividend and company's liquidity if affected. But in case of bonus shares, there will be no cash outflow. Dividend from shareholders' point of view is given for profit maximization. Dividends is a short-term benefit. Bonus, in other hand, is a wealth maximization of shareholders. It is a long-term benefit. Now we are going to see the questions which are asked in the exams. Getting into the questions, we should know what are the accounting entries passed when issuing bonus shares. The first entry is passed to fund the bonus shares. In utilizations of reserves, the order should be followed. Capital redemption reserve account, next security premium account, next general reserve, next other divisible profits. Then the second entry is bonus to equity shareholders account debit to equity share capital. These are the entries passed while issuing bonus shares. Let's see the first question. The question gives us the trial balance. Equity shares 40,000 of rupees 10 each. Capital redemption reserve of 55,000. Security premium in cash. It is specifically mentioned it is in cash 30,000. General reserve 1,05,000. Surplus, that is credit balance in P&L account 5 lakh. Then the question says, company decided to issue bonus shares to equity shareholders at a rate of 1:4. For this purpose, it decided that there should be minimum reduction in free reserves and to said past journal entries. Here 1:4 means every 4 equity shares you held in the company, they will give one bonus share. And the another point here mentioned is minimum reduction in free reserves. That is, general reserve and surplus should be used in minimum. The first thing we should find is number of bonus shares to be issued. That can be found out by multiplying existing equity shares into the rate or ratio given at the question. In this question, 40,000 is the existing equity shares and the rate given is 1/4. If we multiply both, we get 10,000 equity shares. It is the amount of equity shares issued as bonus. Then we should find out amount required for issuing 10,000 bonus equity shares. As I said, bonus are always issued at par. So 10,000 equity shares into rupees 10, which is 1 lakh. Since we found all the above things, we can start passing entries. The first entry should be CRR, Capital Redemption Reserve Account debit 55,000, security premium realized in cash, so we can take the full amount 30,000, and general reserve 15,000. Here in this entry, because the question specifically said there should be minimum reduction in free reserve. The second entry is bonus to equity shareholders account debit 1 lakh to equity share capital 1 lakh. The answer is complete. We only have to pass 2 entries and a working note to find how many bonus shares are to be issued and the amount required for issuing such bonus shares. And next we can see a question which is asked in RTPs and exams. The question says it has given the extract of balance sheet. The balance sheet items are given here. Share capital and general reserves are given. We can see what the question wants us to find. The question says it has made the final call of rupees 2 on 2,70,000 equity shares and the amount was received on 20th April. Thereafter, the company decided to capitalize its reserves by way of bonus shares at a rate of 1 share for every 4 share held. And it also asks us to pass journal entries and write up a balance sheet extract. So, as per the question, we should first find out the number of bonus shares to be issued. existing number of equity shares into the rate 1/4, one share for every 4 share held. Then we can get the 67,500 equity shares. The amount required will be 67,500 into 10 face value 6,75,000. We should first pass the journal entries for final call, for making it due and the amount being received. The first 2 entries for that purpose. The third entry will be for bonus share. CRR account debit 1,20,000, security premium account debit 75,000, general reserve account debit 3,60,000, P&L account debit 1,20,000, to bonus to equity shareholders account 6,75,000. And the last entry will be bonus to equity shareholders account debit to equity share capital account. Balance sheet after bonus issue is given here. You can copy the format in the question itself. Authorized share capital, next issued, subscribed and paid up share capital, then last reserves. Since we used all the reserves for bonus issue, only P&L account is balance. Sometimes in some questions, if we issue bonus shares, it will exceed the authorized share capital. In that case, we should give a note. In the note, we should specify that the authorized share capital is exceeded after bonus issue. Therefore, the company needs to amend its capital class of MOA to increase its authorized share capital. That's all about bonus issue. If you have any other doubts, please let me know in the comment section. Thank you for watching.